Bitcoin just dropped 5% in a single day. Not because of a hack, not because of a scam, because of tariffs, import taxes on foreign goods. And a lot of people are asking, what on earth do tariffs have to do with Bitcoin? That's exactly what we're breaking down today. Because the answer tells you something really important about how Bitcoin actually behaves in the real world and what it means for you. What's up? I'm Sats. And today we're making the Trump trade war and Bitcoin actually make sense. Let's keep it simple. Let's start with the timeline, because this story has had more twists than a Netflix series. Back in January, President Trump announced sweeping tariffs on 8 NATO allies, the UK, France, Germany, and others, threatening a 10% tariff from February 1st, rising to 25% by June unless Denmark agreed to hand over Greenland. Yes, really. Bitcoin dropped 3% the same day. Then in mid-February, the US Supreme Court stepped in and struck down Trump's tariff regime in a 6-3 decision, ruling that no president had ever used the relevant law to impose tariffs of this scale before, and that it was unconstitutional. Bitcoin bounced 2% on the news. And here's where it gets wild. Trump responded by calling the ruling anti-American on Truth Social, and within hours announced a new 15% worldwide tariff, higher than the original, under a different legal authority. Bitcoin dropped 5%, falling below $65,000. Gold, meanwhile, hit record highs. That's the whiplash in a nutshell. Supreme Court says no. Trump says yes anyway. Markets react every single time. This is the question I've seen everywhere this week. Bitcoin is supposed to be decentralized. Tariffs are about physical goods crossing borders. Bitcoin doesn't cross borders. So why is it selling off? Here's the honest answer. Right now, Bitcoin is trading like a risk asset. That means when investors get nervous about inflation, about a trade war, about a recession, they sell risky things first and move into safe havens. And right now, gold is the safe haven of choice. Bitcoin is not. That might surprise you if you've heard Bitcoin called digital gold. And it's a fair description in theory. But in practice, when fear hits the market quickly, Bitcoin tends to move in the same direction as tech stocks, not gold. In fact, over the past week, Bitcoin's correlation with the S&P 500 has been sitting at around 0.55, meaning it's moving in lockstep with the stock market more than half the time. So when tariff headlines spook investors, they sell stocks and they sell Bitcoin. It's that simple. Not because tariffs directly affect Bitcoin, but because sentiment drives short-term prices, and sentiment right now is nervous. Here's where it gets interesting, and this is the part most news coverage completely misses. The argument for Bitcoin actually gets stronger during a trade war, just not immediately. Think about what tariffs do. They raise the cost of imported goods. That pushes up prices across the economy. That's inflation. And we already covered in a previous video why inflation is one of the strongest long-term arguments for Bitcoin, a fixed supply asset that nobody can print more of. When governments start trade wars, they weaken trust in the global financial system. They undermine confidence in fiat currencies. Countries start looking for alternatives, and Bitcoin, decentralized, borderless, not controlled by any government, becomes a more attractive option over time. One analyst at Grayscale, a major crypto asset management firm, put it this way: tariffs will weaken the dominant role of the dollar and create space for competitors, including Bitcoin. He's not the only one saying this. Several economists have made the same point. The key word there is over time. In the short run, fear wins and Bitcoin drops. In the long run, the very conditions that cause the fear, inflation, currency weakness, distrust of governments, are exactly the conditions that Bitcoin was designed to survive. Let's talk about the elephant in the room, and because right now gold is absolutely cleaning up and Bitcoin isn't. While Bitcoin has dropped around 47% from its October high of $126,000, gold has surged more than 80% over the past year and recently hit record highs above $5,000 an ounce. Investors fleeing uncertainty are choosing gold, not Bitcoin. Does that mean Bitcoin has failed as a store of value? No. But it does mean Bitcoin has not yet completed the journey from speculative asset to genuine safe haven in the eyes of the broader market. That transition is happening. Institutions are buying. Sovereign wealth funds are adding exposure. ETFs have made it easier than ever to hold, but that process takes time. Here's the thing to hold on to. Every previous time Bitcoin has gone through a painful drawdown, and there have been many, it has recovered. It fell 80% in 2018. It fell 70% in 2022. It recovered both times and went on to new highs. That doesn't guarantee the future. But it does tell you something about how durable the demand is. I know what some of you are thinking. Should I be buying the dip? Should Should I be selling? Should I be worried? Well, I'm not a financial advisor, and this is not financial advice. But here's what I can tell you based on everything we know. If you're a long-term holder, someone thinking in 4-year cycles rather than 4-day cycles, a period like this is historically where Bitcoin accumulates best. Fear creates opportunity for patient buyers. Dollar cost averaging, I'm putting in a fixed amount regularly regardless of price, removes the stress of trying to time the market perfectly. If you're brand new and nervous, that's completely understandable. The right move is to only put in what you can genuinely afford to lose, and then ignore the short-term noise. Checking the price every hour during a volatile news cycle is a fast track to making emotional decisions you'll regret. And if you're tempted to sell everything because tariffs are scary, just remember that the people who sold Bitcoin during the COVID crash in March 2020, when it dropped to $5,000, missed one of the greatest recoveries in financial history. Short-term pain, long-term picture, that's the framework. All right, let's bring it together. Trump announced sweeping global tariffs. The Supreme Court struck them down, Trump raised them anyway. Bitcoin dropped 5%, gold hit record highs. Bitcoin is selling off because it's currently trading like a risk asset alongside stocks, not because tariffs directly affect it. But the long-term argument for Bitcoin actually gets stronger in a trade war environment, because tariffs drive inflation and undermine trust in fiat currencies. Exactly the conditions Bitcoin was designed to address. Gold is winning the short-term safe haven battle. Bitcoin hasn't completed that transition yet. But the demand is durable, the fundamentals haven't changed, and history says patient holders tend to come out ahead. That's not hype, that's just what the data shows. If this helped make sense of what's happening, hit subscribe and drop a comment telling me what you think. Is Bitcoin reacting the way you expected? Does the tariff story change how you think about it? If you want to see how we broke down a similar story, when the US-Iran conflict sent Bitcoin dropping, watch this one next. Same kind of chaos, same kind of framework. And if you're new here and want to understand what Bitcoin actually is before any of this makes sense, start with this one. Stack smart, stay curious. See you in the next stack.